everyone. Welcome to Well Persist, our first product presentation. And after having a wonderful webinar last week, we are glad to have you here today. And thank you for attending. So today, Daniel Lombard is with me, the founder, the company, but also the receiver of the vision to assist people at a level that no one else in South Africa is actually doing. And I think maybe as a quick introduction, Daniel, you can just quickly give us, a couple of seconds of why this dream?
Yeah, thank you, Gerard. Thank you for preparing me for that good question. Fortunately, it's in my heart. Guys, thank you. I think if we can combine, when you get up in the morning, I always ask when people want to be employed with a company, that's my first question is, why do you get up in the morning? And I think if you can get up in the morning to make a difference while you're making good returns and assisting people in the process, there needs to be something more to live for than just making money on a transaction or whatever the situation is. So I think that's very important. And that is my input for this one, Gerard. Are you there, Gerard? Galoo. Okay, Gerard has left me for a moment, guys, so he'll probably join us shortly. There's probably some nice, obviously we had the lovely opportunity to move offices, and we trust that our internet is also as trustworthy as where we are at the moment. So thank you for having patience with Gerard joining us again. From my side, I think it's important today that we have a session where we can actually have a relaxed discussion, and I think it's very important that you guys must share. Jump in. We are going to, after each of the discussions, give opportunity. So you don't have to be concerned that you have to raise your hand all the time. But when we get to the stage where we have a specific finish with a specific short session, then we will provide you with an opportunity that you can just share quickly what you have got in mind, or questions that you may have, or whatever that is. So our whole idea here with Gerard is he's going to jump in for us, just touching on the type of products. We don't want to waste your time too long with that, so that we can get into a bit of the nitty-gritty and actually look at specific deals, how it works, and all those type of things. Yeah. So Gerard, go for it. Thank you very much.
Thank you, Daniel. You can hear me?
Yes, you can hear you clearly.
Thank you. Okay, so basically, if we speak about product solutions, there's two main pillars that we've built over the years, and the one is traditionally called the recovery, which buy and lease back option, and what we basically do here, I call it a buy-to-let on steroids. It's a product that provides you with a income as well as capital growth. And if you look at the structure, it's typically where the owner comes in, is able to sell the property to you as an investor. He will take transfer of it, and he will pay you a rental on a monthly basis. And it's on average a 2-year structured transaction. And so on the other hand, you'll see that on sale product, which is typically also called a flip in the industry, is where a client says, listen, not be able to rent back from you, please will you sell it for me immediately? And then what the investor comes in for is he buys it, or he invests into it. There's different structures that you'll see spread it now. But it comes down to about a 9-month transaction on average, and we immediately prepare for market and we sell. So it's a capital growth in nature. There will be no income related to this also. Okay, so if you can go quickly a bit more into the detail of each product, you will see that our buy and lease back option, and hope you can maybe just slide, is number one. It is a distressed real estate owner that sells property to the investor and provide the property as security. So what we have done up front, I can assure you, we will touch on it maybe later, is the risk mitigation process for a client to qualify for this product is very stringent. And if he does, when we publish on the website, you will see that your risk is being managed very well. But the principle of it is he sells his property. And then as you require it, it's either a transfer, some deals are done on a forward sale basis, and is recorded, a recordal is done against the deed of that property, or as we would just say, a first bond is registered in some cases. But the minute, because we can do bank deals, bank finance deals, obviously then we do transfer. Number three is the previous owner signs a lease to rent the property from you. It is what we call a triple net lease, which means any interest increase, any municipal cost increase, any damages, all the costs basically. It's as if he's still the owner. That's the principle of the matter, but he's leasing it. And many people will ask, how does he lease back when he's in trouble? And we will get into that. It's a very simple answer. But it is predetermined, all the figures, and I think that's most important when you get to our product solutions. All of our numbers, all of our returns, all of our rental agreements are in writing, and it's upfront signed by both the seller and the investor at the end of the day. Thank you. So what is the core principle of our business is to assist. There is so many people that get phone calls from the client, from the banks, and say, listen, we are taking your property as for the security that we have, and we will be going to auction and sell it. And the idea is then to say, well, and we've seen it so many times. I mean, with the principle where the client owes, for instance, 500,000, but the property that he owns is paid cash, and it's 1.8 million, the value of it. And then the banks will sell it for, let's say 750 and get their money back for all the cost, but the client who's in trouble loses all the equity that is in the property. So what we do is we acknowledge that, and we say, okay, so we will assist you, take out the bank, sort out your credit issues, but you are now not credit worthy. Your credit score has taken a hit. You are unable to finance anything from this moment, but we have this equity asset. So let's use it. And there is where the game becomes a reality for them, because now they have the option to actually, buy it back when they are ready. So principle is that the owner is protected with agreements while it's renting, and on the other side, the investor is protected with registered, agreements in the deeds office, the transfer. And the end result is that both parties has a balanced approach in terms of the security that they're providing to receive. So very important is that this product has been tested. We always say to our owners, remember, if you default, there is a penalty for that. The other hand, for our investors, they have control of the property. They have it in their own name. And at the end of the day, you won't transfer it back if they are not adhering to the agreement and the principles that we are putting down for their object.
Great. Gerard, I just want to add there, just something which is very important is one of, the massive transformative purpose of the organization is, which you actually just summarized there, is recreating your world through property. So basically you use your asset, you leverage against your own asset if you're a real estate owner who made some mistakes and some bad choices. And now you are placed in a position where you can recover either to keep your home or otherwise to maximize, as Gerard said, on the end of the day, what comes out of the transaction. I think the next step is to look at how does that compare with, what's a buy-to-let type of property comparing to our buy and lease back products. First of all, I think the idea of the compound returns is one that we'll touch on in a second, but just in basic, if you want to invest R1 million today and you look at this screen and you look at the top line there and you invest R1 million through a 10-year cycle, and your average transactional timeline for most of our transactions is 2 years or less. So if it's 2 years, in that case, you'll do 5 transactions in that term. But the key is actually lying in your getting out your 1.3. If you can look after year 2 at the top column, and you'll see there that you're looking at 1,360,000. The key is you are getting that money out. Although you had the property through the term, and that's what most people miss, it's still a buy to let if you want to look at that. The only difference is that you sell it at a certain stage, and therefore now you reinvest an amount of 1.36 million, which is approximately 18% in this case. And then you work through the term, and every time that you reinvest the capital plus the returns, which gives you a total of about 4.6 million capital and returns. And if you deduct the capital, you see at the end of the last one, the total initial capital line, you'll see there's an amount of 3,600,000. So if you do the same thing with your normal transaction of R1 million, with show the escalations and rentals, we've done all those things, calculated. The bottom line is you end up with a additional profit above your capital of 1,700,000. So the logic is there's no guru stuff in this. There's no fancy things that we do. The only difference that you have actually made a decision upfront to do is to buy a buy-to-let, but sell it after 2 years and replace it, and instead of that. Okay, so that's the key part of that. And I think if we jump on to the next slide here, we can actually see the difference between the two and what happens. And I don't want to ponder too long upon this because I want to get into the nitty-gritty of a specific deal. So if you look at that, that gives you a very good idea of the difference. The one is keep a property for hold. Yes, you want to still achieve it. And I know there's a lot of people, and I myself believe in that, in passive income for the future out of property. The goal is after 10 years, you can take your 4.6 million and rather buy 2 properties to the same value of the first one that you just kept, and it will give you an additional income, a much higher income. So this blue line is really just the methodology to get to your goal. And that's the key in the approach that we have towards that. So if we jump to the next, this I don't want to spend too much time on, but this is the key. There's a major difference. And the place that we've seen it the most was during COVID. During the COVID term, we had a big difference between the buy-to-let tenant market that dropped down to about 62% good standing tenants or good paying tenants, whilst on our recovery products, we actually had a drop of about 7%, just to give you an idea. Why is that? First of all, it's because the owner versus tenant approach. When people were in trouble in the time of the COVID, they just went and handed in the keys at the rental home. Sorry, I lost my job. I can't pay anymore. and you stuck with it, because where does that tenant actually goes if he hasn't got an income now? So you are struggling with, but I'm sure a lot of you have actually experienced that. Then secondly, when you compare the two, predetermined prime plus returns, which means you're always cash positive from day one, whilst on a normal rental, if you get a 7% actual net yield, you're doing well, which means if you do use finance, you're going to pay in for the next period of years. Gerard touched on the triple net lease situation. So basically, any interest rate change, levy change, municipal changes, or any maintenance is paid by the tenant. Why would he do that? Because he is the owner or the previous owner, and he sees himself still as the owner. He wants to keep his property, so he's going to pay that expenses, where a normal tenant will probably negotiate with you and say, no, I don't want to pay that. So all those type of things. If there's increases, and this is a risk mitigation thing, is that you're on the end of the day, if there's any changes in rates and taxes, interest rates, and you're just a normal buy-to-let landlord, then obviously it will affect you in your personal cash flow. A rental secured against default, because you have a 25 or 35 or whatever percentage of buffer between the market value and the price that you purchase, you obviously can cover arrear rentals. We also have a 3 months rental included that lies on trust, so it covers you for that time if you have to sell the property or anything like that. And then the property rental and management are normally an additional cost to you, whilst in our case, with a net yield that we're talking about 13.75 is already includes all costs. That means your gross is actually not 13.75, but it's actually substantially more. Then just to touch on our results over the last 10 years, it gives you a good idea of what the returns was over the term. And I think if we can prove through the very difficult cycles that we have been through in this last 10 years, including the COVID, credit crunches, whatever that was during that term, and you can still consistently through every cycle actually provide returns like this, then I think you can start feeling a bit more comfortable that most of the risks are mitigated in the process. So before we look at the actual transaction, this is the time, guys, where we would like some questions, please. Please, this is like it's like having lunch or coffee. Join me for a coffee, have a chat. Thank you. We want to hear your questions. It's important for us. Christian, you guys can just see if there's any questions on the group. What is there? Okay. We have a question from one of our participants, which says, what is, does they want to have it like, what is the net return? Or okay, so the net returns means obviously after, if I can jump back to the previous slide, the net returns that we're talking about here, predetermined net returns, it means your investment after all costs that you're putting in your pocket. So in our case, our net returns are payable on a monthly basis. And I think with a deal example, I think your question will be better answered. But in this case, that means if you invest R1 million today, that your return is 13.75 after all costs. That means in 1 year, your rental return on that case will then in that case be 137,000, call it 500 or whatever that is, divided by 12 will give you 11,450 Rand a month, which means that is your monthly rental income or your returns that you will get. And then there's also a predetermined capital growth, which is normally between 5 and 6%, that type of thing. So that means that we'll obviously address that. I hope it addresses your question. Then thank you. We've got another question here from Arun. Your percentage in percentage value. I'm not 100% understanding what is the question on that, but in percentage value.
Now, maybe you can just expand, but that's the 70%
Okay,
return
yeah,
rate.
but Arun have sent another question, so that maybe clarifies it. Does the 17% return rate fluctuate if the prime rate, interest rate changes? Very good question, that one, Arun. So in this case, definitely. So if the interest rate goes up, then in that case, your monthly rental will be adapted in line with. So let's say like we had the big jump from 7% to 11% or 11.75 where it is now, then in that case, your rental would have proportionally gone up with the same amount, same proportion, which means that all our investors, the returns during that term, even if they had mortgages, didn't have to pay in for their mortgages because it is included. And we have adapted to that. So that I hope that addresses that, Harun. Then next question, what is the minimum amount one can invest? Gerard, I'll leave that one to you.
Well, Daniel always say that we can accept, anyone's contribution to a system. So, but there is an official minimum, and that's currently 100,000. So, because you must understand there's two types of investment, ways, and the one is using a bond. Yes. The one is using a bond, which is a bit higher than, in terms of qualifying. So normally on a cash basis, it will need 100,000 rand, and though we had ones in the past, 50,000 rand, just to give them.
Sorry, Gerard is just broken up there. So yeah, we have previously done lesser amounts, which was quite successful. But obviously, if you use a mortgage, you can use 100% mortgage. It's normally advisable that you must at least be able to cover your own cost for the bond registration, or otherwise also what we call our buyer's fee, external buyer's fee cost, which is normally about 3%. So it's always a good idea to have about 5% at least to contribute from your own side. Are you back, Gerard?
Yes, I'm back. Sorry, apologies. Okay. For some reason, this Zoom platform was jumping up and down. So, sorry.
I have finished your question, so it's fine. I'm going to give you the next one. So, since the tenant was in trouble, and I think you touched on that, how can you afford to pay rent, levies, maintenance, etc.? Now, before Gerard jump into the answer of that one, I'm just going to also ask Christian and Tana to, and I think most of you have probably received it. There's a short video clip of about 5 minutes of somebody that was in trouble, which is an actual case, so that you can look at that and see, oh, this is how it actually works. But I'll leave Gerard with just addressing that question.
Okay, so basically, when we assess the individual upfront, we have a full assessment that is outstanding and
Gerard, sorry, you are breaking up there. So I'm just going to jump in. Gerard, sorry, you are breaking up there. I'm just going to answer that question quickly. So in that case, what we talk about here is that when a client is in trouble, most of our clients, and I could call it probably in the region of about 70 to 90% of our clients, are in trouble because of short-term unsecured debt. So they may not owe a lot of money on their property, for instance, and there's lots of equity available in their property, their bond, which means their bond is mostly paid off or close to paid off, but they have made short-term debt. Now, because they've made short-term debt, that means the bank, now they are overexposed, as they call it in the credit industry. And because they are overexposed, it means that they actually can't go to a bank now and apply. So in that case, there's nobody that can assist them. And the only way that we can assist them is buying their property, unlocking that capital that is caught up in their property. We use that same money, we settle the debt. And when the debt is settled, we run their credit score for a period of time, which is normally between 6 and 12 months, mostly, and sort out their credit status so that they can get back into the mortgage market again, buy their property back at a predetermined value. So that is exactly how that is possible. Okay, so to go to the next question, for this specific section, we're gonna close off with this last question on the recoveries. So it says, if you were in a situation where you had 100,000, can one invest this into property using it as a starting point to start a property portfolio, looking for ways to earn passive income in the long term? Very good question. Definitely can do that. So if you are not in the position to make use of a mortgage, but you only have the 100,000, then we can actually start with that, and you can co-invest with some other investors in the meantime who actually has got a specific specific creditworthiness, and they again don't have a deposit, so we combine that, and on the end of the day we can resolve that for you on the end of the day. I hope that answers that question. Arun, I just want to confirm we have got currently most of our agreements are Sharia compliant, but we can have that discussion offline at a stage. We've done quite a lot of investment into getting it Sharia compliant. Right, so let's move on to our next slides, and just looking at a specific transaction that we're gonna deal with. So if you give me a moment, I'm just gonna open that transaction up, and I trust everybody can see what's happening there. This is a specific transaction that is, I think this one is it available or is it taken up already? I can't remember. Say again. Reserved. Okay, it's currently reserved. I'll explain what that means. Now, this is very important for anyone that registers with us and start the process. This is the way to actually get into your transaction, where you can actually go online, review the available opportunities. And what is the great part of this is that you can go into each of these transactions and see exactly what the status is. You first of all have photos, so you can actually go through all these photos, see exactly what the property looks like. And most cases, there's also a video normally there, so it gives you a good look and feel. You will have the purchase price, as you can see here, which we are purchasing at. Now, this is very important. If you look at this, purchase price is 752. It's 63% of market value. So what do you have as a buffer in between to protect yourself against anything that can go wrong. More than enough. You've basically got 37 or 36% of equity in that property. So if something goes wrong, that your capital is secured as well as your returns. Now, important is if you look at the portfolio here, you always will have a, if I look at the breakdown here, you'll see there that your net rental income gives you 103,000 on an investment of 750,000. So just to do a quick sum for guys, for those who your bond payment on that amount would approximately, on even if you lend the full 750,000, would be in the region of about, call it maximum 8,000 Rand a month, depending on your interest rate. And if you take that, you got 103,000 divided by 12 gives you 8,500 in your pocket, which means you are cash positive from day one on our transactions. You don't have to wait 5 or 7 years to actually get to that stage. Your predetermined further profit. So you'll first of all get your 103,000 Rand per year, plus a predetermined profit of 37,000, which give you 5%, which give you a total return of 18.75. Then there's a fee that you pay our wealth assist team, purely for the fact that they do all this work for you, which is a very low price to pay. And that means that you end up with a net profit of 128,000, which gives you on your 752 a return of 17.03%. Now, if you are, this is very important, and that's why we propose that all our investors become accredited investors. Now, that doesn't mean you have to do all kind of funny things. You have to just give us a mandate to search property for you, update you about these properties. And when you actually do that, you can now go into all this homework that is already done for you. So in this case, you can go into the investment information, which is basically our deal solution acceptance for you as an investor to give you a breakdown of everything. Then you can go into the monthly income, that breakdown, which I just explained to you. If you look at this, for instance, this is what it will show you. It will show you how much you're going to put in your pocket. It's 8,619. There's a further option fee that put on trust. You can see that what our management fees is, every single thing, so that you can work from there and determine your cash flow as an investor in that case. You can further look at, just want to go into, sorry, I'm the wrong one. So just close this one, Tana, or this one. Great. So here you've got the full valuation report. So in this case, if you want to make sure now where you would have done all this homework yourself, you can literally go, this is a professional valuer that have done a valuation on this property. We use independent valuers to every single property that we do, a full-on report. You don't want to go through it now, but it tells you what's in the market, what is for sale, what is the replacement insurance value, what other properties are in the market that you compare it to, what is the actual values, if you have a quick sale value, forced sales value, all those type of things. If I size this up slightly, you'll see there it's got a buyer's mad price, it's got a listing price, it's got a market value price. Everything is verified. If there's maintenance, what maintenance would there be? And the same way we have what we call an inspection report, which actually shows you the detail of everything on that property, so as if you have walked through it yourself. Then you can choose here to reserve the property as an investment and take it up yourself from that basis. Great. Any questions up to here, guys? Okay, Carol's question. Since the tenant was in trouble, how can they afford to pay? Guys, we had that question 3 times. I know it's 100% all the time we get that question, and it's understandable. I think it will be answered by the video clip, which we will circulate to every one of you. Then the next one, Carl, when is a buyer's fee payable upfront, monthly, or at the end of term? Very good question, Carl. Love it. It's one of the few that comes up with that one. Carl, it's included in the total investment. So that amount is only payable together with the full purchase value. So if I can take the example of this transaction that you actually got in front of you, you'll see there that the 752, that will normally, in that, will illustrate that the 12,000 is additional, and then you know that you have paid 770,000 in total, and that is only payable together with a full purchase price. You can either include it in the mortgage or pay it cash, whatever your current situation is. But that will normally be on the same time as you pay the purchase price. I hope that addresses that question for you. We've got Mr. Anonymous. Thank you for your question. What happens in case of a default by the original owner who facilitates, and do you facilitate the eviction, the sale of the property, so forth? Very good question. First of all, I think one of the keys that you need to understand in this specific product is that if you purchase this property and it's on your name, and now we have to go through a process. We've got an agreement with the owner that everything above your profit goes back to him. All right? We've got a performance profit that we get after you have earned your returns. Then after that, the rest of that money. So in this case, to make it very practical on this deal that we've got here, let's say it's a year later or 9 months later and we're selling, there's a default on this transaction. We'll put the property in the market. Let's say we sell it for 1.1 million. Then we deduct the commission and other costs. So there's $1 million left. So there's actually 250,000. Your profit, additional profit, is the 37,000, which we now pay. Then there's quite a bit left for the owner, probably in the region of about 200,000 rand. So if he is difficult, he first of all pays a penalty on your purchase price of 75,000, which we normally will obviously cover the legal cost and those type of things if we have to. But why would a person, and this is what we found over the last 10 years, nobody wants to actually get into that and get into a legal or litigation process, and on the end of the day, actually utilize their own equity that they would have got out, and now they have to pay it towards us, either for the 10% penalty or for legal costs, because the contract says that if he, in that case, have a default and we have to take legal action, he is responsible for it and it will be deducted from his proceeds. So it just doesn't make sense for anybody to do that. And that is why for 10 years, we literally had one litigation case that went to court, and the morning at court, the real estate owner settled with us and sorted that out. Who facilitates that? We facilitate that through litigation attorneys. We don't do litigation ourselves, but we do manage the mitigation process or the mediation process up till the stage that we decide to go to court. And that is no extra cost for you. And we will facilitate that up to that stage. And most of the transactions issues have been sorted by that time. Okay, the next question from Carl is currently, from Maroon, is, will the tenant pay into my personal account? We do the collection. We make sure that we pay every single thing. We don't let the tenant pay, for instance, things like even his rates and taxes, levies. He pays that full amount to us, as call it a real estate assist in this case, because the real estate assist manage the properties. And in that case, they make that payment into your personal account or either into your mortgage or whatever the case may be. So I trust that answers that question for Carl. And then for Arun. So currently, Carl's question is currently the net rental income will be very much break even. Should you decide to bond the full amount, is that correct? Yes, they will. It will not be a break even. You will always have literally 2% above the rate. So if your rate currently is you lend money at 11.75%, which is the prime rate or less, we get prime plus 2% as a rental, which means you will always be 2% positive. And if you actually get mortgages for lower than that, you will actually have a higher buffer than just a 2%. The capital growth question, what is the capital growth entailing of? It is actually a predetermined return which we pay at the end of the term. So let's say this deal was 2 years that we have got on the screen. Then in that case, it would have been 2 times the 37,600. So it's an additional 5% capital growth, which between you and the party you have decided that is what he pays to actually have this opportunity to keep his home. Now that sounds like an expensive session for him, but just remember that his capital growth on the property itself, on the market value, is 5% per annum, more or less, the average of our country at the moment. So that gives you an idea. So effectively, that doesn't really cost him that much. In actual fact, very little if his capital growth is 5% per annum on a property and you getting 5% per annum capital growth. That means you're going to get that 37,000 after he bought back at that time when he buys back the property is when you receive that. If it's the same, if it's in the first year, then you'll get that first year's. But if that was a second year transaction, then that would also be included. Anthony, just top confirm net rental income after the rental management and the rental insurance, etc., have been deducted, and all legal fees are covered if the owner is defaulted. Yes, it is covered in the sense of that you have got the equity for that to actually cover that, but obviously there's always an initial. You'll see that the option fees that we for instance have, if you look at the monthly spend here, I'm just going to use that as an example. The option fee stays on trust. The 3 months rental deposit, which would normally be 33,000, would be on trust. If there was any savings on his transaction, that will be on trust. So all those type of things will be allocated. Firstly, if we have to take legal action for that. But the worst case is if we have to carry it for a period of time until we get to the point where the property is actually sold now to a third party, then in that case, you will reclaim your legal costs and so forth and address that challenge. After 2 years, the client will purchase the property. Anonymous question. My apologies for joining late. What happens if the property after 2 years, if the deal is for 2 years? So obviously after a 2-year term, in actual fact, from about 18 months, we will get that client to already pre-qualify for a mortgage. If not, then done yet, then we'll start selling that property on the end of the day. So I hope that covers that one. Guys, I love these questions because this is exactly what the purpose is for this, to address your questions. I'm just going to touch on 1 or 2 more before we move on to the last part. Wealth Assist, FSB registered? No, Arun, we don't have to be. We don't lend money to any person. You also not going to lend money to any person. So we don't have to be registered, and we don't do investments. You do real estate investments, which means that in that case, we have to be registered with a PPRA, which we are. So in that case, we sell properties and property investments. Therefore, we don't have to be FSB registered. The title deed, question for Arun, in whose name does the title deed go? The title deed go into your personal name, in your case, or your company's name if you use a legal entity to actually do your transactions into. Minimum investment period at this stage is normally about, if it's an on-sale product, it will always be anywhere from 3 months to 12 months. If it's a buy and lease back, it's normally 12 months. Great. So let's move on to our next. Let's just give me a second. Great. So now we've looked at that transaction, done our Q&A. So let's touch on the on-sale products. Karat, I don't know if you want to join in here. Okay, so I'm going to touch on it quickly. Don't want to spend too much time on the detail of it. So from our side, you can see that the first thing is that you buy the property. Now, most of these cases comes through applications, clients, real estate owners who apply with us. Now they've applied with us, wants to keep his home, but he can't. So these type of transactions is mostly that type of transaction, or it's an owner who really needs the cash flow for something specific. Then in that case, you can't do the transaction because his property may be in the market, but it's not sold yet. He owes maybe nothing on it or a very low mortgage. In that case, we'll start a transaction where we unlock that capital for them in the process. Okay. So the investor will then purchase that property on the same basis. We've got different products, but we'll touch on that. Then the property investor will fund it through either cash or a mortgage, depending on what type of transaction it is. And then from there on, the property will then be sold on or fixed, normally if there's some maintenance, etc., and be sold on to a third party in the process. So in that case, you become, if I can call it, the joint venture partner in the process, which basically means that you either take transfer, fix and sell, or normally 90% of our transactions finds a simultaneous buy to sell, which means that you don't have to, in that case, take transfer a lot of times prior to selling it on. It normally happens simultaneously. And when the profit on the end of the day gets then shared between the parties as agreed and according to the agreements. So if you compare it to a flip that you do in the market, you would go and buy a property, you would hope that you make some returns on it, and hopefully you get the price, etc., etc. The only major difference for a start is that with our transactions, what we call breeder transactions or JV transactions, is normally that you do a simultaneous transfer, as I touched on that, and there will be a joint venture agreement between the parties which stipulates how the profit are distributed, and that profit is predetermined. So it's not a hopeful return. Again, you remember we bought that property at either 65, 70, whatever percentage of market value, which means that your profit is actually locked into the transaction already. So because if you get call it 17% per annum. And you'll also see when we speak about the returns that some of those returns are much higher than what it normally is with our transactions. The reason for that is because your profit is locked in for 12 months. So if you do a R1 million transaction, your profit is for 12 months fixed. That profit is what you're going to get. Even if we finish the deal in 6 months, it means still the same. All right. So then we do the maintenance facilitation for you. That would all be done up front. We're not going to go and thumb suck on maintenance and all those type of things. We actually make sure that the transactions profit are predetermined in the transaction itself, and that you literally are giving the funding for it, either in your in a mortgage form or in cash or whatever the case is. Just to illustrate more or less the current returns. Now, that's why I'm saying it looks like 59% and all those type of things are quite high. As I said, the reason for that is that we actually, on the end of the day, have a fixed profit. And because we did it in 3 months, and this is normally a good indication of the years that properties were in high demand, where it was more a seller's market than a buyer's market, and where it's slightly lower, it's more the buyer's market instead of a seller's market. Okay, great. So maybe if you guys don't mind, I'm going to jump into the example first, and then we jump into the questions, if that's fine. Otherwise, we run out of time. We've got 8 minutes left. So let me quickly do that and just illustrate to you what the scenario is there. Okay, this is now a JV sale. So I'm going to just run through the figures just to give you an idea. I'm not going to go into the specific property details. This is unfortunately already taken up, and it's an extreme one because you don't always buy at 18% of market value. So this is the latest one we've done, so I've just used that one. But in most cases, our average is about 65%, to give you a good idea. There is some available that is currently also on our website, joint ventures that's available. This is really good transactions. If you got cash in a joint venture, you can't use a mortgage, but in a breather transaction where we first take transfer of that property, you can actually do that. So in this case, you purchase the property at 672,000. You go into a joint venture agreement. So the client provides in a joint venture, the real estate owner provides the property, you provide the cash, and you decide that the profit's going to be split as follows. And now you'll understand why your returns are sometimes higher. So in this case, if the transaction is completed and sold within 6 months, and your profit in this case stays the same, because it stays 127,000. That means if you do it in 6 months, you're actually earning the same profit of 127, but on your 672, which give you a 33% return. And if it's done in 9 months, which is our average, you should probably be in the region of 22% per annum return. And if you do it in a year, worst case scenario, you end up with a 16.7. Now, we all know that most properties, if they are priced correctly, should be selling within about 2 to 3 months, and transfer shouldn't take longer than 3 or 4 months maximum if there's some delay or some crazy thing happening. So in that case, you should end up somewhere between your 22 and your 33% in this case. So the same story, I'm not going to go into these reports, but the same information is available, inspection report, valuations. The only difference with the valuations here, that the additional valuations that we have is a summary that you'll find on there on the end of the day with the 3 area specialist estate agents, especially when a property have to go into the market. We need to have value assessments from estate agents. They're not allowed to do valuations, but they can do assessments, and they tell you in 60 days, we're going to sell it for so much and so much, and all those type of things, and that will be already, that homework will already be done for you. Okay. So let's jump into the questions on the on-sale products. Brendan, thank you for your question. Is this available nationwide, including valuations, etc.? Yes, it is. We do transactions nationally, but I must also say that we have a metrics. We can't, we're not necessarily going to buy a property in Merweville where there's only 1,000 people living or something like that, and there's higher risks, etc. Then the risks need to be addressed. So we seldom do that. We focus on the metros, on the larger cities, and if I can call it smaller cities, that is our focus area to look at assists. Okay, Arun, good question, man. I like Arun. You've got this lovely, more difficult questions, which is so important. Arun, the transfer fees, he asked, who pays the transfer fees? Now, if you looked at all of this and every time you deducted the sum, I'm very glad that Arun picked it up. Who pays for the transfer fees? Because you don't bring it into the cost. And that's a very, very good question. In our case, all transfer fees are included, all right? Not bond registration fees, but transfer fees is included. That means you won't pay additional transfer fees on any of our transactions. So if we've got a property that we buy at 18%, 20%, 50%, 60%, that 60% that you see illustrated is already including the transfer fees and transfer duty if that is applicable. Then Peter, 3 investors whose name is property in, and how does the sale take place if it's 3 investors whose name the property is in? That doesn't matter. If it's, I don't know if Peter is referring to the investors. Yes, yeah, he's referring to the investors. Then in that case, all 3 parties will sign. We facilitate that normally, and we do that quite often. So it's really not a big issue. Carl, what about transfer duty where applicable? Obviously, the transfer duty is applicable. It's included in the transaction purchase price. So if it was, in this case, let's call it not 18%, but 60%, that would have been included, Carl, in that case, on the transaction. 1 minute, guys, then we're going to end off. Unfortunately, I know all of you are busy as well. How do you facilitate the joint ventures? Well, in our case, we will facilitate it with the owner, make sure that there's a covering bond registered over the property, so that that joint venture agreement, we facilitate it, we appoint the agents, we facilitate the maintenance. So everything falls within our services, and it's already included in the transaction. And that means that we will appoint the agents to sell it, and our attorneys will obviously facilitate the transfer to ensure that you are protected through the process and that your money are staying on trust until it's applied towards the transaction, and when it pays out, that the attorneys pays it directly to you. Okay, one last question. Thank you, Carl. Will the investor then only be responsible for registration costs and legal fees on the transaction? No, he's not responsible for any legal fees. He's only responsible for, if he uses a mortgage, to pay the attorneys for the registration of the mortgage, and that part of it. And the external buyer's fee, obviously, as we mentioned earlier in the transaction. Guys, I have to, unfortunately, we have to jump off. I would want to suggest that all of you who are really interested to make use of this great opportunity to get involved in the real estate, and even if you're a starter, you're a seasoned investor, to get in touch with Gerard, to set up an initial meeting. I think it's very important to have a strategy and a plan to see where you're going and what you want to achieve. Then we can help you and guide you. You know, I always use the example of an insurance broker. You don't go and speak to a short-term insurance broker if you want to do investments. The same here, and please don't misunderstand me. Many agents can give you good ideas and so forth, but it's always better to go to people who specialize in what we do. And this is our job. We look at you as an investor, we see where you want to go, what you want to achieve, and what time. We work out a plan for you. We allocate the right type of transactions towards you. And on the end of the day, you are put on the road to build a portfolio or a plan that you want to achieve. Thank you so much for your time. Tana will probably make this available, I presume, to all the listeners and send you that. And I'll ask them to again send the link of the short video clip of the specific why people can actually be resolved when they are already in trouble and how can that be done. Because I think that will answer your question on that. Anything else, Gerard? Yeah. Okay. Gerard just apologizes. Today his link was not that good. So he says he'll do the next presentation and I can rest. Thank you, guys. Book meetings, guys. Get to Gerard. Let's get on the road. There's quite a few opportunities available. Don't miss out on them. Thank you so much. Have a blessed day.